Guys, how you all doing? This is NKD TRADEZONE. So on today's video, we'll be discussing a particular topic which many crypto investors till date are very much awaiting. Some are envisioning, some are predicting, and in so many cases, many are waiting to see the result. And that is, how high is BTC going to go in this bull's run? How high of a price would we see BTC get to in this bull's run? Can we see a $200,000, a $300,000, 400, 500, as some people say? Some say BTC is going to top out at 120K. But that is a very mediocre sum for Bitcoin, because currently we are almost at a $200,000 site, but price currently is at what, 96,000. But we can as well see that there is a high chance that we can at least claim $200,000 on the long run, and 120,000 we are speaking about is like a few days time we can get that happen, just a very few days from now. So 120,000 as a prediction for BTC is a mediocre sum. So let's get on to today's video now. In today's video, first things first that we want to look into is the Bitcoin halving. Now, the Bitcoin halving refers to an event that takes place about every 4 years and reduces the block reward by 50%. This lowers the supply of Bitcoin entering the market, which in turn increases scarcity and acts to raise its price. So this particular system of BTC halving, it facilitates what we call the bull's run, the period whereby market keeps on going on to the upside. If you can look at this chart right about now, one thing we can find out is very peculiar with this chart is the fact that according to the curve, we've just been on an uptrend. Year after year after year after year, we've just been on an uptrend. So this is one of the impact of the halving in the crypto market. Now, looking very much into this, we can see something happen here. These 4 yellow lines which are placed are the years of halving. Every single individual halving we've had from November 2012 to July 2016 to May 2020, and currently the halving of this year 2024, we had it in April 2024, which was April 19th 2024. So these are all the years of halving, and going into them one after the other to look at its impact, we can see that we had the halving happen somewhere around there, and we had a parabolic followed by the year of the dump. Following that, we also have the next halving here, which after the halving we had a parabolic followed by the year of the dump. Following this, we had the next halving, which came with a parabolic right about here, and followed by the year of a dump. And now we've currently seen this year's halving, and we've seen some good price rally to the upside, but we can still do better. As you can see, compared to so many other years, we are likely somewhere around this zone here. So compared to so many other years, we are likely somewhere around there. So we still have a good sum to go, but how high, we cannot say by just simply giving irrelevant parameters. There must be a reason, some relevance to give us the current parameters that we want to predict as BTC likely chance of achieving. And in today's video, we'll use so many procedures to find that out. We will be in today's video finding out some rational and irrational price prediction for BTC, because some people stating 500,000. As of today, you will find out if it's possible or if it's not. Now, in today's video, before we proceed, make sure you like this video, subscribe to it, and also share it, because this video will hold so much information. It will hold so much information. So joining this, make sure that you stay tuned and also share, like this video. Let it go as wide as possible. Share it all around, and with that, everyone will get to know what is the possible price of BTC. Now, going on to today's video proper and analyzing to know what is the possible price prediction for Bitcoin, we are going to be making use of 5 phases in today's video. The first phase, we call it understanding the peak and bottom period of each cycle. Second, we call it identifying the price range of cycles. Third is the in-depth review of the phases of pumps and dumps in each cycle. The fourth is evaluating the depth and price interference of each cycle. And lastly, predicting the exact top of this bull cycle with all data collected. So with these 5 phases, we'll be able to note what we'll be doing in this bull's run, how high are we going to go, and how far would we go, and how long will it take us to achieve this target. So right about now, we'll be starting up with the video proper. We commence on the first phase of this video, which states understanding the peak and bottom period of each cycle. Now, before you can talk about how high BTC can actually go, you need to know the time limit it has to achieve this particular height. So it's a thing of time against direction. It's a thing about time against direction, the X and Y, to get you the time curve. So you get a curve on this particular system of BTC. Now, when we talk about that now, let's look into the setting of each and every single year, look at its peak and also look at its bottom. So that's the first thing we'll be doing. When does he achieve these parameters? Now, let's go on now, firstly, to the 2012 bulls run, which, as you can see, it peaked around sometime in 2013, and its peak time was around November 2013, as we can see here, 25th November 2013. That was when the 2012 bulls run got to peak. Now, to bottom, we can actually trace all the way from here, going all the way to the downside, and we can see that it bottomed somewhere around January 2015. The ideal time for bottoming is around 1 year after it has achieved its all-time high. So this was the all-time high of Bitcoin in the 2012 bulls run. Then this was when he achieved his bottom. So between November 2013, then all the way to January 2015, that was when he achieved his bottom. Then we started on another run to the upside. Now let's move over to the 2016 bulls run. We saw the 2016 bulls run peak at around December 2017 and bottom someplace around this zone here. So let's get that plotted. Bottomed around December 2018. Now, following that, we go over to the next bulls run, which you can see peaked around November 2021, then bottomed around this zone here around November 2022. So now, looking at these factors here now, there's something that you can get to notice is the fact that in every single year, we get to top somewhere around November, then we bottom somewhere between November to early January. So bottoming is around November to early January, then the top, we get our tops at November or December. So that is the first statistics to actually follow up. That means in this ongoing bulls run, which is the 2024 bulls run, we should expect to top anywhere between November or December or January 2026. So either we top November or December 2025. Hence, our top should be somewhere around this given zone here. So our top should come in around November all the way to January 2026. So this is the expectation for BTC now. Hence, we have all the way from this zone here and the price parameters achieving somewhere around this particular zone here. So this is our top of BTC, expecting something around here. We don't expect the price to top, let's say, after here. It can actually top a little bit below. That's somewhere September, October. But above January is not currently possible. That is because of the times of halving. That's because of the time of every single halving date. We'll touch that at the later part of this video. So we're expecting BTC to actually top out somewhere around this zone. So we've actually found out this. Firstly, finding this out, first of all, gives you the mindset that in all expectation, BTC is going to make its high around this zone. Someone is not expecting BTC to go as high as February 2028 or thereabout in this cycle. At least for this cycle, we should know that we are topping out between November to January 2026. So November 2025 at max January 2026. So this is the first phase. We've concluded this, and now we can go over to the second phase. So before we proceed over to the phase 2 of this video, let's take a look into the halving of each cycles, and with the let's say the inside view of the cycles, we can be able to know when the next BTC halving would occur, see what has happened so far and all that. So before we commence on that, I've actually outlined every cycle between 2012 to 2024, and to proceed over, let's get out the cyclic line. So putting the cyclic line at the first point at the 2012 halving, following that to the 2016 halving, extending it all the way to the right. Let's begin. Now, one thing we find out is the fact that before we started up, we've indicated each halving year with a yellow horizontal line, as you can see in the 1, 2, 3, and 4. Following that, now we imputed a cyclic line. Now, this cyclic line works in equal parameters. So expectation of this is the fact that every single zone between here and here is equal, between the next white and the next white is equal. And according to what we can find out now is the fact that the yellow lines now has been given some space limit, which, as we can see in the first point, we had the first zone at the 2012 halving. We made sure to equalize the zone at the 2016 halving. Expectation was that the next zone, which was the 2020 halving, should then correlate with these two. But as you can see, the time gap for the 2020 halving was moved a little bit further. That means instead of 2020 halving coming in the month of March, let's say around 9th of March 2020, it was posted on May, which was the 11th of May 2020. Following that, now this should have been our next halving, which should have happened on the 16th, let's say 16th of October 2023. At this stage, we have definitely defied halving, because halving comes every 4 years. So having to enter into 2023 means that the time range has been defied. And in that given sense, now we saw the halving come in the month of April 2024. So April 19, 2024. One thing you should notice is that when we neglect here and here, which are perfect parameters, following to the next parameter, we can find out that there was a little bit of space between the supposed halving date, according to working with an equal time space between each and every single halving date. We had the next give a little bit of space at this zone. Let's zoom out to get that. So we had the time space give this particular zone here as an ideal time and an equal time. So this was when the halving got to occur. Following this, we had the next halving occur here. That means, to a very good extent, the next halving will have to give a space of around this zone. Let's get that out now so we might be getting the next halving occurring at possibly March 2028. So you can see this was a much more linear space compared to this and compared to this. So the next halving is likely to be coming up in March 2028. Let's say around March 14th, March 20th, thereabout 2028. Following that, the next halving too will give a bigger space, which will be expecting to come sometime around possibly February 2032. So you get the system now, and so on and so forth. That is how we'll be going on with the halving. So in that given sense now, we have been able to naturally identify the possible times of halving based on what this adjustment that has been made year after year. We saw a linear space here. Following this, something broader. Following this, we expect something broader by next year. So by next year, next halving should be coming around March 2028. Following that, possibly a January or early February 2032. So that's what we're expecting now at these given stages. That means in the later period, the cycle of halving might likely change, because following that now, though we have no parameters for a time date on the trading view plan extending that far above 2034, we can be expecting something that at a very given stage, the 4-year cycle might be taken into the previous years. Looking very diligently at this, it might likely start, because we know that the cycle started all the way far back from November all the way to July to May to April. We are expecting the next one time around March, following that possibly February. And at the stage of getting to February, that means we have to start going back or going further. So in very due time, we might see a different halving setting. We cannot conclude on that yet, but in very due time, we might see a different halving setting. So that is all for this now. Let's proceed over to the phase 2 of this video. Now let's get over to the phase 2. Now the phase 2 states identifying the price range of each cycle. So we'll be talking about the all-time high as well as the all-time low of each cycle. Now let's begin. So this is the cycle of the 2012 halving, which we got peak around this zone here in November 2013. Let's get our price range at that zone. Let the price range of this zone be at green. Then let's get the bottom of the cycle, which occurred in January. So this is it right about here. So we've actually gotten to have ourselves the exact top and also the bottom of this cycle. So following that now, let's get on to the next phase, which is the next cycle. So what was the next top of the next cycle? We had that occurring somewhere around this zone here. So this is the price zone here. And following that, let's get ourselves the bottom of the cycle, which was somewhere around also this zone given here. So that's the first two cycles here. Let's make a confirmation to that. So this was the top and this was the bottom. Let's get over to the next cycle here, getting the top and the bottom. All right, so let's get this done. We have the top here, and then following up with that, we had ourselves the bottom here. So each and every of these parameters has actually been filled out. So this is the phase 2, identifying the price range of each cycles. So in that case, we have identified all tops and all bottoms of each and every single of the halving year, from 2012 halving, the all-time high, to 2016 halving is all-time high, and as high as the 2020 halving and its all-time high. Let's move over to the third phase. Now, according to the third phase, we are going into the in-depth review of the phases of pumps and dumps in each cycle. Now, following up with the previous phase, we are going now to find out the percentage value of each increment and decrement in each cycle. Now, to do that, we'll be making use of our price range tool. So to do that, all we have to do first is to get to the bottom of the previous year, following that to the top of the cycle. So we got that up now. That's the first range. Now the second range is to get what? From the top to the bottom. In that sense, now we've gotten the parameters to the top side and to the bottom side. Now what do we find out here? Going all the way from the bottom of the range of the 2012 bull season, we find out that we bottomed around this zone and we had our top around this very given zone in 2013. We saw an increment of 637% to the top. Explaining this is quite simple. From the bottom of the bull's run to the top, it would have taken a 635% to actually achieve it. But going all the way from the top of the bull's run to the bottom of the bull's run of the 2012 cycle, we have this right here. Let's change it out to the color so we can have something different. So we had what? A dump of 86%. As you can see here, a dump of 86%. So that means from the high of the bull's run all the way to its low, we got a dump of 86%. That's quite high, if you would say. Very quite high, if we would actually say. So we won't say much about that now. All we have to do now is to move over to the next cycle. Now, following up on the next cycle, let's do the same for this cycle right about now. We have the what? The top here, and we have the bottom. Let's get on with that. So firstly, let's get our descent here. So this is all the way to the downside. Then from this price range here, we get all the way to the top side, changing out the color. So with this next year now following, which was the 2016 bull season, we saw a top at 2017 December. Following that, we had a bottom at around the December of 2018. So a 1 year time period. Now, judging all the way from the bottom here to this top, we had a pump of 525.68%. As we can see, it's lesser than the preceding year, which had what? A 635% pump to get to the previous price. If you are what? Taking it aback. We are not actually going to look into going from the bottom here to the top. We are actually looking from the bottom to the preceding top. So we have a 525%. So the ratio now is lesser. And looking in now to the next phase, we have this also, which we have an 83.79% if we look at this very closely. 83.79%, which as we can see now is 3% lesser than the previous year. That means BTC dumped by 3% lesser than it did the previous cycle. Now let's go on now straight forward to the next cycle, doing the same thing. Once we go from the bottom here, which was the low, all the way to the top here, we find out something. But before that, let's take ourselves all the way down to the bottom at this range. Now, looking at this, we simply have from this bottom here to this top, we have ourselves a 354%. That was very, very far off from the last two phases. Only 354 compared to 500% and 600% plus. All the way from the top to the bottom, we have ourselves a 77.94%. And according to the previous year, we had an 83.79%. So it's as low as up to 5% difference. We have up to a 5% difference on this right about now. So we've actually gotten these 3 years. We found out one thing is the fact that from the bottom to the top, which is something like from here to here, we've actually been going down all the way from 635% to 525% to 354%. And making judgment from how deep BTC goes in every cycle, we had the first at 86%, second at 83%, and third at 77%. So judging by these statistics now, we can clearly say that BTC every single year is dumping lesser to the downside. So that means as we had the last dump as low as 77.94 with a difference of 5%, this year's halving of 2024, we might be expecting a 73% dump in the market. We don't expect as high as a 77% dump in the market. You know, talking about this market, we can liken it to a market like Solana. Solana in the previous cycle dumped as high as over 90%, which was its first major dump because that was its first bulls run. So it dumped by 90-something%. This year, we might see a dump of 80-something% on Solana. Following up, we have a 70-something%, and you get the whole statistics there. The more this particular coin now gets into the market, the more it's traded, the less likely to be dumping harder by each cycle. That means at a very given cycle, in the next coming years, let's say the next 5, 6, 7, 8 cycles, BTC dump after an all-time high can be as low as 50%. So if we get to see BTC rise as high as $1 million, it might just dump to $500,000. Rather than if it was the case scenario of 2012, whereby we saw BTC fall all the way as low as 86 point something dollar. In the year of $1 million, if it's still the same parameters, we would have seen BTC go all the way from $1 million to less than $200,000. But as stated, as the years is going by, the chances of a coin getting to fall and dump after its all-time high reduces. That means for this year, we should see BTC doing something around, say, 70, 72%, 73% marks, I presume. So that is it on the third phase of this cycle. Now let's get over to the fourth phase of this video explanation. Now in this fourth phase, we call it the evaluating the depth and price interference of each range. I'll be explaining that shortly. This is the more complicated part of this video. Now, speaking on that, we find out that something happened in the year 2013. We got ourselves to the all-time high of BTC. And once that was done, we found out that even after the price got to the all-time high of the next halving, which we saw in the year 2017, we did not see price get to interfere into the previous year all-time high, which means that the price got to close above the previous year all-time high, which happened at this zone. So you understand the system. We had the all-time high here, price dumped all the way to this zone. We had a rally during the next bulls run. Following up with that, we had a dump to the downside, but the price did not get to interact with the previous year all-time high. Now, contrary to that, following up with the bulls run of the 2020 season, we had the price go all the way from this range of the all-time high of the 2016 bulls run, get to its depth around this zone, go all the way to the upside. Following that, we interacted below the zone of the 2016 bulls run all-time high, going below the 2016 bulls run all-time high, which according to what we saw, this was the 2016 bulls run all-time high in the year 2017 December, and we saw price go all the way into that zone and way below it. Now with that, we'll be speaking on today's topic, which I stated is evaluating the depth and price interference of each cycle. Now let's comment. First thing we want to do now is to get out a trend line. Putting a trend line at the previous bottom of this cycle all the way to the bottom of the next cycle. We have this right here. Now from the bottom of this cycle, let's trace out the bottom of what? The next cycle. So taking this out here, we trace out the bottom of the next cycle. Now let's get ourselves a percentage returns on this. So a percentage returns on this, we have price going all the way from this zone here to this zone here, which is what? A 1,437%. So we can find that out as a 1,737%, which we see as a, let's say, a 17x in ideal. So a 17x in ideal from the previous bottom to the new bottom. We have ourselves a 17x. So let's get that done with now. All right, the second on that. X17. So X17, the previous cycle. Now following up with the next cycle, what can we see here? We got all the way from the bottom of this price range to the next bottom of this range, and we just got ourselves a 300%. That is likely to be an X3. Let's label that as an X3 right here. X3 right here. So you can get the difference now. That means there was a very profitable movement from the very bottom of the previous cycle to the bottom of the next cycle, as we can see here. But following up with the next, though we had a very big range, we only got ourselves a 300%, which is a price difference from the price of $3,200 all the way to $15,000. So a 381%, which in real sense we can actually, let's table this at X4 thereabout. So X4, let this be tabled out at X4 once we get to sum it up. Let's table it out as what? An X4. So what this actually gets to state to us is the fact that in the next bull cycle, we will not be expecting an X4 from the previous bottom. We'll make an amendment on this very shortly, then you get to understand that. So from the bottom of the previous cycle, here in January 2015, which was a year plus after the top of the 2012 cycle in 2013, we got price to this zone. Following that, we got an all-time high here in 2017, coming all the way to the downside. We got price around this zone, and when we try to configure between the previous bottom of the last cycle and the bottom of the new cycle, we had a 1,737% move, which is around the 17x, which was price range of $166 all the way to $3,200 right about here. But following up with the next year, we only got price around the zone $3,200 all the way to $15,000, which in real sense estimated to around an X4. That means for the next year, we will definitely not be seeing up to an X4. That means what I mean is the fact that for the next bull cycle, we should not be seeing up to a 380% dump or price movement from the bottom to the high. So something like this. So something like this. I'm trying to get the date range here. So we're expecting the next cycle to bottom around between November to January 2026. So let's say around this range here now. We get this right about now. This was the previous bottom. This is 380% here. So our expectation is the fact that the price range for Bitcoin would not be up to this. That means the next bottom, which should come between November 2025 to January 2026, cannot be as high as 70,000. So if you are actually imagining that the bottom of BTC after this bulls run is at 70,000, it won't happen. We'll likely get something like around an X2 thereabout. So before I proceed, let me try to get this in check. Let's assume that we bottom around here. Let's assume that this is the bottom of the 2024 bull cycle. Hence, we're expecting something like this price range around here. So this was the bottom of the previous cycle of 2020, the 2020 bulls run, and this should be around where we should bottom in the 2024 bulls run. So stating that, as I stated, we are not expecting, this was a 381% move from the previous bottom of the last cycle to the bottom of the cycle of 2020 bulls run. We do not expect price to replicate that same percentage value. Rather, we expect something of a 200% or thereabout. So I'll be putting an estimate of what? A 216%. That is what I'll be putting as an estimate on this particular price movement at this zone. So first thing you should know is the fact that BTC likely is going to be topping around $50,000, or bottoming, rather, around $50,000, but nowhere above its previous all-time high of the last cycle of $69,000. We won't get that. We'll see price fall all the way below the previous all-time high, according to the principles of our phase 4, which states evaluating the depth and price interference. So the price interference is what I meant by this. We did not interfere in the 2016 cycle, going below the 2012 bulls run price, the all-time high. And in the 2020 bulls run, we got an interference into the zone of the 2016 bulls run all-time high, which happened in 2017. Now, looking at this, we are working with statistics and percentages. So we know that very likely in the 2012 bulls run, we saw this X17 from its bottom to the high of the 2016 bulls run bottom. Following that, we had just an X4 between the 2016 bulls run to the 2020 bulls run. We don't expect to see an X4 in the next year. That's what I stated. At a very given range, as BTC continues to move to the top side, we'll be seeing more of a lesser dump in the price market. As we saw previous years, 86% dump, 83% dump, 77% dump. We expect a 73% dump in this cycle. So that is it. We have firstly gotten our supposed price range at this given stage, all the way from here to this particular zone. This is our expectation. Now, following up with that, let's try to see if we can make an estimate of any given zone, but that will be coming in the phase 5. So I've actually gotten to wrap up with this particular zone here, and we'll be ending the phase 4 at this stage right about now, giving all parameters. There was a display of every single parameters that we've taken in this video, and with all that, we'll go into the 5th phase of this analysis, which is predicting the exact top of the bull cycle with all data collected. Now, we just displayed all the data collected, and there is something that has been very significant in each of them. Every single parameter, every single setup, every single percentage has been on a decrease over the years. Every single one of them have been decreasing over time, and with that, we'll be working to get the exact top of BTC. Now, let's get on to that. For that right now, as I stated in the previous videos, the previous phases, I stated the fact that BTC is going to have a dump of 72 or 73% this bulls run. And following up with the previous setups, we saw that we're expecting the price of BTC to bottom somewhere around here. We're not expecting something above the previous all-time high, but rather below the previous all-time high. And with that, let's quickly get on to check out the chances of BTC all-time high of this season. So let's get on. We've actually put in the price range here. Let's change out the color, and with this now, let's use something more open. Now let's go. Now we have a 61% here. Move all the way to the top side. We want price to get to around 72, 73%. So this is it right about here, giving 73%. So we've actually used the previous analytics to confirm our supposed bottom, which is somewhere around 48, 49, 50,000 by estimation. And then by calculation, we know that we should have BTC dump to around 73%. No more than that. We don't expect a dump of around 80% or so. So an estimation of around 73%. And with that given, BTC all-time high should be coming out around 180,000 and thereabout. So using the whole parameters of what is possible and what isn't possible, by next year, let's say November, December, earliest 2026 January, we should see BTC top around 180 something. And at the worst case scenario, using a 74% and 75% here, we have BTC max out before 200,000. So in this particular given bulls run, we'll only be going on to the first digit in a six figures, which is the $100,000 mark. That's what we'll be achieving. We are likely not going to see a 200K in this bulls run. So following up with that, this is what is being expected here. Let's get out a zone now. Let's get out a zone from current price. We are expecting price to get all the way high. This is the BTC expectation for an all-time high, somewhere around this price range here. So this is the BTC expectation for an all-time high. Now let's get that out. Get over to this rectangle zone. We're expecting the price range around 100 and something thousand to below 200,000. So somewhere around here we should top. And to bottom, we should bottom likely somewhere given around here. So that's it for BTC. We get our price range all the way from this current price of 95,700 plus. Even if we see a dump in coming days, we are not interested in that. We have a pump to around this zone here. Following up with that, we have a dump to around this zone by late 2026. So this is it right here. All right, so we had a little bit of error here. Let's get this done. All right, so something around this zone here. We've actually had this error on for quite a while, but it doesn't still interfere with our results. So this is it right here. This is the expectation for Bitcoin. Price all the way from this zone as high as 180 to 190 something thousand. The psychological level of 200,000 should not be interacted with, and then we have a dump below, let's say 50,000 thereabout, which on a very good note we have here as a flip zone. So this is what I mean by having here as a flip zone. Let's cancel this out. Cancel this out. Cancel this out. So look at this zone here. We once had this zone here as a resistance. Price went all the way to the downside, came all the way to the top. We converted it into a support. So when you take out your this thing here, place it around this zone, you have here as a flip zone. So a zone that was once a resistance became a support, and likely for the next bulls run might become a next support. So that is just it right about there. And that's the expectation for the next coming bulls run. So following up with that, we bottom somewhere around 50K, and we start our rally to the upside once again, with the expectation that for the next bulls run, we are likely going to top somewhere around So the next bulls run comes up 2028. According to our earlier phase in the video, we said somewhere around March 2028, and it should top around 2029, the ending of 2029. And following up with that, we can see a price surge possibly around here to 600,000, 500,000 thereabout. That will not be a case for this video now. In the next video, we can talk about how high we'll go in the next bull cycle. So this is right about what we should be expecting for this bull cycle. Price going up as high as range 180, 190,000, and likely not breaking the psychological level of 200,000 for this bull's run, and we'll be getting price all the way as low as 50,000 thereabout. So let's check out something now before we commence on this. Now let's take out our Fibonacci tool. Using the Fibonacci tool, we get the bottom of the 2012 cycle. Getting the bottom, we trace ourselves all the way to the top of the next cycle, which was the top of the 2016 cycle. We saw that from the Fibonacci, we had the bottom here, we had the top around this zone. We broke all the way below, even a little bit below the 0.786 zone before we got a bottom of this given zone. So a little bit below the 0.786 zone. That was for that particular year of halving. So let's get a Fibonacci tool out once again. Checking out the next year, we had our bottom around this zone here. Getting all the way to the top side, which was the high of the 2020 bulls run. Same thing happened here. We got a little bit below the 0.786 zone, and we bottomed around that particular price range. Now let's check using our current price target. So this was the bottom here, and we're expecting to top out somewhere around this zone here. So with price target, according to what I stated, a little bit below $50,000. So the same thing we should be expecting here. So this is confluence to the expectation right here. We stated that we drop a little bit below the 0.786 zone, which should be somewhere around what, 50,000 and 48,000. So you can understand what I've actually done in today's video, and you should get to note the fact that we might get only 180, 190, likely not $200,000 before BTC drops all the way back down. So it might just get as high as $199,000. As we've seen currently, price of BTC went only as high as 99,006. Then we started dumping all the way from there. The same might happen in this peaks of the bull cycle. We get price as high as 180 something, 190 something thousand. Peak around the expectation will be 200,000, 200,000, and BTC will start dumping. While people are expecting 200,000, we find ourselves at the bottom. As I stated, we should go a little bit below the 0.786 zone. So the 47, 48,000 zone should be the bottom for Bitcoin. So expectation still remains from this price range to this price range, all the way to this zone, 47,000 plus. Then we go all the way for the next bulls run. So with this now, we've gotten confluence in our setting and our setup. And with that, I'll be ending today's video.